Something huge is happening in Bitcoin right now. Every cycle, people say, this cycle, it's different. But right now, I have proof that this cycle is actually different. Whales are entering the market harder than ever. And a new explosive use case for Bitcoin is emerging, which is fueling a massive supply shock. And now Donald Trump signed an executive order that will throw gasoline on the fire. This is the biggest buy signal ever. If you miss this, you'll be looking back on this moment with lots of regret in just a few months from now. So stick around, because in this video I'm going to break down exactly what is happening, why it is happening right now, and how you can position yourself before Bitcoin goes parabolic. All right, before we get started, do me one quick favor. If you enjoy watching videos like this one, where I break down all of the complex moving components in the world of finances, crypto, investing, and break it down into simple and easily digestible bits and pieces so that you can take action to maximize your profits, then make sure to smash the like button and subscribe to my channel, because I'm going to be posting videos just like this one regularly throughout this crypto bull market cycle to help you to position yourself for maximum profits. All right, now let's dive in. The biggest Bitcoin buy signal in years. You can't afford to miss this. Now, what am I talking about? Well, here you see this, this chart, which is showing the similarities between the 2017 cycle and the current cycle. So in the blue line is basically the 2017 Bitcoin cycle. Well, in reality, it was from 2015 to 2018, more or less. And if you overlap the current movement of Bitcoin's price with that of the 2017 cycle, then you can see it's almost one-to-one. It's very similar in the way that it is moving right now. All right, but this is what we hear every single cycle. This time it's different, guys. This cycle will not be the same as the previous cycle. And like I mentioned in the introduction, I have proof to back it up. All right, yes, it has been following the 2017 pattern almost to a T, but I believe, based on what I'm going to show you in this video, that this cycle will be even more explosive. So what am I talking about? What is this proof? Well, here in 2017, we have this, we basically have this breakdown of the price of the number of Bitcoin held by different entities. So here you see governments, so mainly US and China, held Bitcoin that they seized through criminal lawsuits, and ETFs, which also held a significant chunk of Bitcoin. And together they held around, 400,000 Bitcoin. 370,000 Bitcoin, something like that. Now, what was this ETF? Because the bulk of the Bitcoin-related ETFs were approved just last year in 2024. So how was it possible that in 2017 there were already ETFs that were holding Bitcoin? Well, that had to do with the Grayscale Bitcoin Trust. So the Grayscale Bitcoin Trust was the first Bitcoin ETF, or actually it was a trust. And yeah, here you see this chart. It started trading before 2017. So here we took this snapshot in 2017. So that shows that this Grayscale Bitcoin Trust was holding a very significant chunk of Bitcoin, and the rest was held by governments, and all of the rest was held mainly by individuals. By individuals. Now, this current cycle, this composition of who is holding Bitcoin is completely different. Now you see in 2017, there were mainly governments and ETFs. And here you see a variety of different players on the market. You see private companies, you see governments, you see DeFi and smart contracts, you see ETFs, and you see public companies. So completely different than the 2017 cycle. So if we are again going back to the beginning, and if we're looking at the similarities, then yes, the price of Bitcoin is following the 2017 cycle for sure. However, this time there's much more buying pressure in the market because these institutions, these ETFs, these public companies, they're not buying with their savings. They're not investing their spare $100 at the end of the month. No, they're investing with billions, tens of billions, hundreds of millions, like large amounts of money. So the composition of the players in the market has totally changed. Here you see it from a different perspective. So according to this platform called here bitcointreasuries.net, there are around 156 known entities. So there's probably a lot more entities that hold Bitcoin. However, not all entities make it public that they hold Bitcoin and what their wallet address is. So we've got 156 known entities with doxed wallets that we can track, of which half of them are public companies. So then we're talking about MicroStrategy, Semler Scientific, and Metaplanet, and a bunch of similar companies. We've got private companies, so that are not listed on the stock exchange, but that are holding Bitcoin. We've got governments that are holding Bitcoin, ETFs, of course, that are holding Bitcoin, and we have some DeFi projects that are also holding Bitcoin. For example, there's some DeFi projects where you can deposit Bitcoin. First, you need to wrap it and wrap Bitcoin, and then you can deposit it in a smart contract, and then you can borrow against it. So that's also one way. There's, of course, many more different reasons why people would use Bitcoin in a DeFi project, but one of them is borrowing and lending. Then if you look at the total amount of Bitcoin that they have in treasury, it's around 3 million Bitcoin. And if you take into account that there will only ever be 21 million Bitcoin that will ever be in circulation, then this 3 million Bitcoin is quite a significant number. And it has been growing very rapidly. Again, BlackRock is buying very rapidly, MicroStrategy is buying very rapidly. All of these public companies are popping up left and right that also announce that they want to add Bitcoin to their treasury. So I only see this number of Bitcoin in their treasuries increasing over time, and the number of entities holding Bitcoin increase over time as well. Now, yeah. So that's very important for you to understand that the composition of the players on the market has completely changed compared to 2017. Here you see a bit of a visual. So yeah, you see MicroStrategy owns around 470,000 Bitcoin. Maybe it's even 490,000 Bitcoin already by the time that this image is updated. So yeah, public companies, of which MicroStrategy is the largest holder. And then we have a bunch of smaller publicly traded companies, also publicly traded Bitcoin mining companies like Marathon Digital, which is, in addition to mining Bitcoin, raising money to acquire more Bitcoin. Then we have private companies like Block One and Tether, which holds a lot of Bitcoin in their treasury. So almost 83,000, and Block One. So I believe that's a company of Jack Dorsey, the founder of Twitter and Stripe. So he started a new Bitcoin-related company, Block. And then we have ETFs, of course. So iShares, which is BlackRock's ETF, holds a lot of Bitcoin, 575,000. Fidelity, 214,000. Grayscale still holds 200,000, 202,000. And a bunch of smaller ETFs. Then we have government entities, so mainly the United States, China, and the UK are the largest Bitcoin holders. And what I mentioned before, in DeFi, mainly people convert Bitcoin to wrapped Bitcoin. So wrapped Bitcoin is basically a smart contract where you can deposit Bitcoin and you receive wrapped Bitcoin, so WBTC. And with this WBTC, wrapped Bitcoin, you can basically interact with different smart contracts on mainly the Ethereum blockchain, and you can enable stuff like borrowing and lending against those assets. Then here are around 15 million Bitcoin which are remaining and which have not been mapped to, let's say, companies or individuals. Here is an estimate that around 1.4 million Bitcoin have already been lost. For example, because people's crazy ex-girlfriends destroyed their ledgers, or the fact that people lost their passwords to their crypto wallets on exchanges, for example, and they can't recover it. And there's around 1.1 million Bitcoin that has not been mined. By the way, this 1.4 million Bitcoin that has been lost, that is an estimate. There are estimates which claim that this number is much higher. So around 3 million Bitcoin that has been lost. However, we never will truly know the exact amount of number, the exact number. Probably this is based on analyzing wallets on the blockchain. The blockchain is completely open and transparent. You can see all of the activity happening on the Bitcoin blockchain. And probably they have created some kind of formula that if the Bitcoin has not moved in an X amount of days or years, then they assume that those are lost coins. Or if the wallet has not interacted with anything in the past X days or years, then it's lost. So I think that is calculated in this way. All right, now here is this tweet or chart by 𝗗𝗶𝘀𝗰𝗶𝗶𝗵𝗵. He's saying whales are buying Bitcoin like never seen before. And I personally believe that the easiest way to spot profitable trends in the financial markets is to look at what the smart money in the market is doing. So within the world of investing, you have dumb money, the retail investors, which are basically triggered or motivated by fear and greed. And then you have the smart money, the institutional investors, the whales, which are driven by data and experience. And oftentimes, you don't have access to the same data or experience as the whales, the institutions, the big dogs in the market, but you can copy what they're doing because everything on the blockchain is completely open and transparent. You can simply see what the large wallets are doing, so wallets above 100 Bitcoin, 500 Bitcoin, 1,000 Bitcoin per wallet, and you can track their activity. And now you're seeing that they are buying like never before. So here you see the purple line, that is the number of Bitcoin that they're basically purchasing, the big dogs. So yeah, smart money is buying right now, while retail investors are completely panicking. They believe the market is boring, because it's not going up in a straight line. We had some dips. So retail is being flushed out while whales are buying. And that is typically a sign that the market is going to absolutely explode. Because in the exact opposite scenario, usually you can identify the top of a market by looking at what the big wallets in the market are doing. And when big wallets or the whales are selling, that's usually a time to start taking profits, but they're doing the opposite. They're buying. And the market generally doesn't move like how you expect it to move. When all of the retail investors believe that the market will do one thing, it will probably do the exact opposite thing to hurt the largest amount of people. So whales purposely create pain in the market so they can scoop up cheap Bitcoin. And that's exactly what's happening right now. Retail investors are panicking, so they're selling their Bitcoin, and who are buying up those Bitcoin? The whales, and they're buying it up with a nice discount along the way. So when we are looking at all of those different companies that are holding Bitcoin, when we're looking at the publicly traded companies, you see MicroStrategy, recently renamed to Strategy. They hold around $48 billion of Bitcoin, around 471,000. Then Marathon Holdings, Riot Platforms, HUD-8 Mining, CleanSpark. So Marathon Holding, Riot, HUD, and CleanSpark, those are all publicly traded Bitcoin mining companies. And then we have Tesla. Interesting. So Tesla is owned and run largely by Elon Musk, richest man on earth. And the fact that Tesla owns Bitcoin, again, is a very positive signal because Elon Musk is super connected, has a super analytical mind, I think one of the smartest people on earth. And if Tesla is holding on to their Bitcoin, then probably it's a really great signal to the rest of the companies as well. Then we have Coinbase, of course, which is an exchange. Block, we talked about it. Bitcoin Group SE, German company. Then we have a Hong Kong company, Boya Interactive International. Galaxy Digital, which is a digital asset company, Hive Digital, which is a miner, Semler Scientific, which is a publicly traded company. And there's a bunch more that are coming out and basically buying up Bitcoin to be part of their treasury. So instead of holding cash or short-term treasury bonds, they decided to store their excess liquidity in Bitcoin, because compared to bonds or dollars, Bitcoin offers you a real way to store your wealth and to outpace inflation. Okay, what you want to do is, on the one side you have inflation, and inflation is created by all of the money printing by central banks, and the more units of money are pumped into circulation by these central banks, the more the value of each individual unit of money decreases. Now, your whole goal as an investor or CEO is you want to either maintain your purchasing power, but even better is if you're able to increase your purchasing power over time against inflation. So if everything is becoming more expensive, if your investments are going up in value at a much faster pace, then you'll be able to buy more goods and services in the future, despite inflation. Now, when we're looking at all of the ETFs, so you see there's a bunch of different asset managers out there which have launched their own ETFs. So iShares, Bitcoin Trust, which is BlackRock, Fidelity, Grayscale, ARK Invest, Bitwise, Grayscale, Van Eck, Valkyrie, Franklin Templeton, Invesco, WisdomTree, Hashdex. So all of those want to have a slice of the Bitcoin ETF market. So we have publicly traded companies which are adding Bitcoin to their balance sheet. Then we have ETFs which are also scooping up lots of Bitcoin. And again, what I mentioned, these guys are pumping billions into the market. Look here. Right now they own around 1.1 million Bitcoin. Guys, there will only ever be 21 million Bitcoin that will ever be in circulation. This Bitcoin that they're holding has a cumulative value of $120 billion, and around 5% of the total supply of Bitcoin that will ever be in circulation. And most of this was accumulated in just the past year. MicroStrategy was actually the best performing company on the US stock market in the past 4 years. It generated around 1,500% returns compared to the more or less 150% return of the S&P 500. So yeah, and the whole reason why MicroStrategy performed so well is because for the past 4 years, it started to adopt a Bitcoin reserve strategy, meaning that it would buy up Bitcoin with its excess liquidity. And the market received this so well, they really liked this strategy, that many investors were attracted to MicroStrategy as a way to gain exposure to Bitcoin, but not just Bitcoin. It's more of a leveraged Bitcoin play, because right now, MicroStrategy is using a lot of debt. He's using debt and equity to raise more money, to scoop up as much Bitcoin as humanly possible. Their goal is to acquire 1 million Bitcoin as soon as possible. And they even came out with the announcement that they want to be the first Bitcoin bank in the world. So I would really, I've been thinking about this for a very long time, and I don't want to sell any of my Bitcoin. I want to hold on to as much of my Bitcoin as possible, because I believe it's very similar to like a AA location real estate. Let's say that you're owning real estate in one of the best locations in New York or Manhattan. Do you ever want to sell it knowing that it will probably go up in value forever? No. You'll probably want to hold on to that asset and borrow against it. And MicroStrategy, now called Strategy, is going to enable that. So I would prefer to deposit my Bitcoin with MicroStrategy than a bank. Why? Because we know that banks can go bust over time. If you don't believe me, look at the data. You'll see that actually banks going bankrupt are very common. Not that long ago, we had the case study of Silicon Valley Bank that went almost bankrupt, Credit Suisse that went almost bankrupt, Silvergate Bank that went almost bankrupt in 2008, Lehman Brothers went bankrupt. But these are just a selection of big banks that you know of. But a lot of banks actually go bust, especially in the US. So I would prefer to deposit my Bitcoin with MicroStrategy, because even if everything goes south, then actually MicroStrategy is sitting on a lot of value. They have a very big cushion of safety because they have a lot of Bitcoin as a margin of safety. So whereas many of those banks, they don't have a lot of reserves. Because the reserve requirements for banks, and maybe you've ever looked up fractional reserve banking, are very low. So banks can operate with very small reserves. Basically, they lend out almost all of the money that they have, and yeah, they're basically a house of cards. As soon as a few big players or negative news comes out about a particular bank, then when a bank run comes, most of those banks don't have enough assets to cover their liabilities to the people that have deposited their money at the banks. Whereas MicroStrategy is actually sitting on hundreds of thousands, and if you believe that they're going to realize their strategy, then they're going to be sitting on 1 million Bitcoin very soon. Now, there's also a bunch of other companies which are coming out and that are copying their strategy. So MetaPlanet, which is a Japanese publicly traded company, they have been announcing almost practically every single week that they're going to buy up even more Bitcoin. So they are like the Japanese version of MicroStrategy. And their target is to buy 21,000 Bitcoin by 2026. So they started in Q2 2024 last year. They purchased 141 Bitcoin. They almost tripled that in Q3 of last year to almost 400 Bitcoin, and then almost, quadrupled that to almost 1,800 Bitcoin, and they keep on stacking more and more and more, and their goal is to acquire 21,000 Bitcoin. And this is just one company. Just like MetaPlanet and MicroStrategy, there are so many companies out there. So what is the reason for all of this institutional investment, you might ask? Well, here is a tweet by 𝗗𝗶𝘀𝗰𝗶𝗶𝗺𝗿. He's saying that developing a war chest of Bitcoin is the most powerful way to pursue a company's mission. Storing value on your treasury in the form of Bitcoin enables a calculated strategy. Why? Because if you look at the alternatives, holding cash is guaranteed to lose purchasing power over time due to inflation. Then buying bonds, well, you can get a few percent if you're holding bonds. However, if you're earning a few percent interest, then inflation, I don't know, the governments are announcing their inflation numbers. However, they constantly keep changing the baskets that they use to measure the inflation. So it is not a consistent benchmark over time, and governments manipulate the definition of inflation or consumer price index to report the lowest possible numbers. But I believe that in reality, the inflation numbers are much higher. And that's why it's important to have a hedge against inflation. So if you want your company to survive and thrive for the longest possible way, then yeah, I agree. Then holding Bitcoin in your reserve is probably a really great and smart strategy. Here is another tweet by 𝗗𝗶𝘀𝗰𝗶𝗶𝗺𝗿. He's saying the traditional finance world is waking up to a stark reality. Bitcoin isn't just a digital asset, it's a hedge against inflation like no other. Institutions are positioning themselves to safeguard their wealth. The move towards scarcity is not just a trend, it is a necessity, guys. We just came out of the post-pandemic era, and you saw that governments and central banks could just add trillions of dollars of new money to the circulating supply in just a matter of a few months. And I believe that our generation, or everyone that has witnessed this, is now extra aware of the illusion of money. What is the value of money if it can be created with just a few clicks of a button? And that's why everyone is opening up to these other assets which offer really great stores of value. Of course, gold is a great store of value. It has been the go-to store of value for many centuries. Many ancient civilizations used to love gold. The Romans, for example. But gold has many downsides. You need to store it, and whenever you want to exchange it, you need to walk with your gold bars or your gold coins over the street to go to an exchange to convert it to something else. And that's very risky. So whereas Bitcoin, you can simply put it on a ledger, or you can open up a wallet, and you can move it through space or over distance without anyone really noticing that you're carrying large amounts of Bitcoin. So it's a lot more safer. It's a lot more, how you can say it, you can more easily transport it. You have lower storage and security costs. So yeah, a lot more benefits to holding Bitcoin compared to holding gold. Now, here is a tweet by Bitcoin Sapiens. Public companies must buy Bitcoin to prevent their stock from being sold in preference for Bitcoin. Yeah, exactly. Well, if Bitcoin was named the best asset class of the past decade between 2010 and 2020 because it generated 230% of annual returns. Well, most companies don't produce those returns. So you might want to boost your company's performance or the value of your company by adding some Bitcoin to your treasury. So the whole strategy that these companies are implementing is you have a really great company with solid fundamentals, with a really great product or service that people are willing to pay money for, and you do that in a really great, consistent way so that you can maximize your profits. First of all, you need to lower your cost, maximize your revenue. That will result in a maximum profit, and a chunk of that profit, you then use it to buy up Bitcoin. So that allows you to basically double or compound your company's growth. Because your company is growing, because you're expanding its operations and its profits, and then you use those profits to invest it in something that becomes more valuable over time. That's a very simple playbook, and every company can basically implement it. Here is another tweet by 𝗶𝗶𝗀𝗶𝗶𝗶𝗶. 𝗶𝗶𝗀 is saying Bitcoin has outperformed most companies on the stock exchange except the company that has been buying Bitcoin. So MicroStrategy. Bitcoin is the hardest form of money, beating companies that continue to hold melting ice cubes, fiat money, on their balance sheet. In the future, to keep up, all companies will have Bitcoin on their balance sheets. Those that don't will fade away, regardless of what they produce. Bitcoin will simply become a company requirement. Here you see this image of money melting away, fiat money melting away. And it doesn't matter whether you have, whether you're holding dollars, pounds, euros, yens, I don't know, in the Indonesian rupiahs, all of that money is becoming worth less over time because of money printing. And that's a guarantee. It's not a probability. It is a probability, but the probability is 100%. So it's a guarantee. Based on historic data, of course. So here's another tweet by Wealth Squad Chris. He's saying using Bitcoin as your company's treasury gives you a competitive advantage in business over everyone who doesn't. Your sales don't need to grow as fast, which means that you don't need to lower the quality. You'll be able to survive the droughts, higher quality, and play the long game. Exactly. So here he's pointing out something really interesting. Most companies are focused on super hyper growth in order to, satisfy investor expectations. But he is saying that by adopting a Bitcoin treasury reserve strategy, you can simply focus on doing one thing really well, providing quality, hiring the right people so that you can produce a little bit of profit, then invest that little bit of profit into Bitcoin, which will then make a lot of profit out of it. So, yeah, I think that's a really interesting perspective. Now, that is a massive use case right now. So companies buying up Bitcoin to hold it on their balance sheet. And you look, those companies compared to retail investors, they have a very long-term horizon. Whereas many retail investors, they want to become rich tomorrow. So retail investors start to panic when the market doesn't go up right away. And maybe if it even has a small dip, retail investors will sell. But those companies are patient. They understand the longer-term trajectory. They're led by very smart, intelligent CEOs and leadership teams which have done their research, okay? And which don't need to sell their Bitcoin tomorrow in order to make a payment for a house or something. They are holding on to it for the long term. Now, in addition, in parallel, something massive is also happening, and I'm pretty sure you've also taken note of it, which is, the US is taking the lead right now in establishing a Bitcoin reserve strategy. So we're seeing all of these individual US states. So Arizona state approves bill to create a strategic Bitcoin reserve. Arizona's decision to explore investments in digital assets such as Bitcoin is indicative of a growing tendency in states to diversify public finances. So on a state level, we heard Donald Trump talk about it on stage and during his campaign, and more recently as well. Now we're also seeing it on the state level. So yeah, in many different layers of the US system, we're now hearing these talks and rumors about Bitcoin treasury reserves. Here you see another tweet, big breaking news. Missouri has introduced a bill to allow Treasury to invest 10% of funds in Bitcoin. Nice. Indiana representatives proposes a bill to allow retirement funds to invest in Bitcoin ETFs. Montana introduces a bill to include Bitcoin in state reserves. And yeah, I believe this image is already outdated. I believe as of right now, there are around 27 states out there which have introduced a bill to add Bitcoin to their reserves. So here you see the different stages. So some states have publicly endorsed Bitcoin. Others have already introduced a bill. Others already have committee approval. And then it needs to go through the House and Senate for approval. And then it needs to be signed into law. So all of these different states are going to these different stages. And it's going to be a very interesting time. And going back to the beginning of this video, when I said that I had proof that this cycle is actually different, it all comes down to the fact that the composition of the players on the market is changing. We're not dealing anymore with retail investors which are saving their spare bucks, which are investing with their spare $100, spare $200, $500, whatever. No, we're dealing with nation states, with states, and with publicly traded companies and institutions that are coming in hard, okay? And on top of that, Donald Trump signed an executive action to create a sovereign wealth fund. Now, there's a lot of speculation or what this sovereign wealth fund is going to invest in. There are rumors that this is going to facilitate the purchase of TikTok. Others are speculating that it will acquire other assets like Bitcoin. But if you have closely monitored Donald Trump's speeches during his campaigns and his most recent actions and all of the committees that he has established around digital assets, Bitcoin, banking, then I believe there is a very big likelihood that this sovereign wealth fund will actually be used to buy up, to partly, it's not going to be the only asset, but to partly buy up a large chunk of Bitcoin. So here you see this update, breaking news, Donald Trump just signed an executive order to create a sovereign wealth fund. You really think Bitcoin won't be in it? The largest capital pools on the planet are waking up. Nation-state FOMO is coming. Stay ahead or get left behind. Now, Michael Saylor has become one of the biggest ambassadors of Bitcoin right now, especially after his massive success. And he is saying that the US should buy up 20% of all the Bitcoin. That's his recommendation. Just like he's using all of the excess liquidity that he has with MicroStrategy, the US should use their liquidity or capital or assets to buy up the Bitcoin supply. So Michael Saylor outlines US ultimate Bitcoin reserve strategy. He's saying dump gold, buy Bitcoin. Michael Saylor, executive chairman and co-founder of MicroStrategy, one of the first companies to adopt the Bitcoin standard, has proposed that the US purchases 20% or 25% of the Bitcoin available using the nation's gold stash as a part of a national strategic reserve policy. Now, let's talk about gold real quick. So here, Q3 2024, so last year, the US was holding around 8,000 tons of gold. So here, 8,000 metric tons of gold in its reserves. This is the largest amount of gold reserves in the world. Now, all of that gold is held in Fort Knox, one of the safest and most secure locations in the world. It's like literally a fortress with with a military base next to it, many different layers of defense and armored walls, bunkers, whatever. It's a super safe, secure place, and that's where the US government stores all its gold. Now, the second nation, the country with the second largest gold supply or reserve is Germany, then Italy, then France, Russia, China, Switzerland, Japan, India, and the Netherlands. So interesting top 10. But yeah, for sure, the US is leading by a very large margin. Now, if you take the value of those gold reserves, it would be valued around $6.28 billion. Now, yeah, that is a very large amount of money. And Saylor is saying that it should sell a chunk of that gold, or maybe even all of it, in order to invest in new gold, so digital gold, which is Bitcoin, which is backed by energy. And yeah, so here is another tweet. Senator Cynthia Lummis proposes a Bitcoin strategic reserve. She's saying buy 200,000 Bitcoin every single year for the next 5 years. Hold it for at least 20 years. And if you do that, then even the US will be able to pay off its national debt in 20 years. Now, right now, the US is dealing with a debt spiral or a debt doom loop, how others like to call it. Basically, it's $36 trillion in debt. And they're seeing Bitcoin as a way to pay off that national debt. So that's all very interesting. And Senator Cynthia Lummis has been part of the Digital Asset Committee of the Senate. So right now she's been placed in a very prominent position in order to help the US to move towards a strategic Bitcoin reserve. And what I believe, my thesis, is that countries, just like retail investors, are like sheep. Whenever one or a few big countries adopt Bitcoin as strategic reserve, then many more countries will follow their lead. They're just looking for one big case study of a respected country to do this, and then they will follow. Similarly, what has happened with MicroStrategy, MicroStrategy is the golden boy of the stock market right now. And because they have been so successful, other publicly traded companies are copying them, just like sheep. But why wouldn't you want to copy them just like sheep? If it works, it works. I always believe that if you want to be successful, then find someone that has the results that you have and simply copy what they have done. Follow their roadmap, follow their blueprint, and then you should be able to get the same results. Now, if a large country like the US starts to really adopt this Bitcoin strategic treasury reserve strategy, then I believe the rest will follow suit. And when that happens, we're going to experience unprecedented levels of growth in the price of Bitcoin, because these countries are sitting, whenever they go in hard. And if a scenario plays out where actually the US sells a chunk of its gold reserves to buy up Bitcoin, they have a reserve that's worth hundreds of billions. So why not take a chunk of it, sell it, and invest it in something that outperforms gold? Because gold, yeah, the performance was nice. And yes, usually it's a great hedge against inflation. But Bitcoin has performed so much better. And if you look at all of the adoption and the buying power happening in the market right now, then I would say it makes a lot of sense. And this might just trigger a new arms race. What do I mean with this? Well, during the Cold War, the Soviet Union and the US were motivated by establishing the largest arsenals of weapons, nuclear rockets, just to scare the other, to show that they were the most powerful and dominant force in the world. Right now, this might trigger a very big run on Bitcoin. You see now how the US is so actively pushing for this Bitcoin reserve. When this happens, it might cause other countries to get FOMO too. And they will all try to scoop up as much Bitcoin as possible at the lowest possible price. Now, I'm really curious to hear your thoughts right now in the comments. Do you believe that we are going to see a worldwide arms race or worldwide race to adopt Bitcoin by countries? Do you believe that they're actually going to be investing hundreds of millions, billions of their reserves in order to scoop up Bitcoin? Do you believe that this is just a fantasy, a narrative pushed by the crypto industry to hopefully pump their bags? Or do you believe that this might actually be a real scenario that is going to play out? I'm curious to hear your thoughts. Drop them in the comments below. And if you enjoyed watching this video, then do me one quick favor. Make sure to smash the like button. To me, that's feedback, so that I know that you enjoyed watching this video and that I should create more of this type of content. And if you haven't done so yet, also make sure to subscribe to my YouTube channel, because I'm going to be posting regular videos like this one to help you to make sense of everything that's going on in the market and to help you to position yourself for maximum profits. All right. That being said, I want to wish you all the best. Peace out. Take care. And I'll see you in the next one.